And we should be connected. There it is, showing Kim. Okay. Hey, Kelly, can you hear us?
Good afternoon. Yeah, hi, guys. Hey, I just wanted to let you know that I accidentally started the webinar early, so we are live right now.
Okay.
I just wanted to let everyone know that we are momentarily going to just be showing commercials, and we will begin the webinar at 1 o'clock. And I do apologize because I know normally now you're hearing a message that says we will be starting shortly. For the presenters, I did send Kim an email with my cell phone number if we wanted to pre-con that way.
Yeah, and Kim's not here. She just left for the airport.
Oh boy. Okay. So Sean, should I email you or Curtis?
Kurt, please.
Yeah, you can.
Okay.
That'll be fine.
Sure, I'll go ahead and email that to you now, and we can put both of our phones on mute and pre-con on the cell phone.
Okay, sounds good.
Again, I just want to welcome everyone. I know that we are a little bit before 1 o'clock, and I do apologize. We are going to be starting right at 1 o'clock. Good afternoon, everyone, and thank you so much for joining us today. I apologize for the little bit of a technical difficulty I had earlier, but it looks like we are all set right now, and we're very excited for our February webinar. I hope the sun is shining where you are, even though I'm sure it's probably a bit chilly outside. So today, I would like to welcome our presenters, Curtis Daly and Sean Wonder from Federated Fiducial. Kurt is the Director of Business Relations for Federated Fiducial. He joined them in 1994 as the Manager of Accounts Receivable and has been advising funeral homes regarding accounts receivable and collections since that time. The scope of his knowledge has grown to include FTC funeral rule, state funeral laws, truth in lending, credit, and collection laws. And then Sean has been a business consultant with Federated Fiducial since 2011. Sean actually began his career in the funeral profession while assisting his hometown funeral home in high school and became a fully licensed funeral director in 1993. He was named general manager of a family-owned funeral home in Terre Haute, Indiana, and eventually decided to change career paths when he returned to school and earned a bachelor's degree and 2 master's degrees. His expertise centers on advising funeral homes and specializes on cash flow, sales acquisitions, tax planning, and budgeting for profit. Welcome, Curtis and Sean.
Thank you.
Thank you.
Well, greetings from beautiful Springfield, Illinois. What is it, 10 degrees outside?
I think if we're lucky, it's 10.
Okay, so the question everyone's asking, at least most of the business consultants out in the field, is how healthy is my funeral home and what to look for in financial statements, etc. Just a couple housekeeping things before we get started. I want to make sure that everyone understands that tax and financial advice, this is not tax or financial advice. Every situation is unique, and the only accurate answer that I've found when it comes to tax is it depends. So don't take this literally. This is just an exercise to try to help you. It is in no way to be construed as advice. Bear with us here.
There we go.
Okay. So why is the financial health important? It's not just important, it's crucial. And just ask yourself, have you adopted or adapted to the changes in the profession? And have you adapted to the changes in the buying habits of the consumer? If you're answering the questions, we've always done it that way, I really don't know for how much longer you're going to be able to do that. What you actually own is a going concern. And what does that mean? That's a financial term that describes a business that is financially stable and is expected to operate indefinitely. When I use the term indefinitely, think of perpetual care funds at a cemetery. Perpetual care means forever. In the past, if families were calling on you for services, chances are you were making money. That is not the case in every situation anymore. So let's find out what to look for on financial statements. I want you to understand what they are telling you. And this is just like going to the doctor. We're going to run some tests on a case here, and hopefully you'll understand a little bit more about financial statements when we're done. The goals of this presentation, we're going to take an in-depth look at a profit and loss statement. Some of these terms are interchangeable: profit and loss, income statement, statement of revenues and expenditures, all fancy words for the exact same financial statement. We're also going to take an in-depth look at a balance sheet, and then why EBITDA or EBITDAR statement is so informative. These financial statements, the ones I just mentioned, are crucial to understanding your business's financial health. At the very bottom here it says, when there's change, there's opportunity. Jack Welch, former CEO of GE, coined that phrase, and I just don't want anyone to be scared of cremation as we go into it, because with these changes in our profession, there are still major opportunities out there. So I pulled some stats not only from our database, but from CANA, Cremation Association of North America. And what I found was in 2008, the nationwide cremation rate was 36%. 2023, it jumps to 61% nationwide, and is projected to be at 65% by the year 2028, which is right around the corner. Specifically for New York State, in 2018, the cremation rate statewide was 46.4%. In 2022, it jumped up to 52.7%, and is projected by 2033 to be at 67%. That means 2 out of every 3 calls that you will receive into your care, the family is going to opt for cremation as the final mode of disposition. From our database of stats, I pulled the contracts that were sent in 2024 from the state of New York. The average cremation sale, now I want to make sure everybody understands, this does not include cash advances. This is net of cash advance. But the average cremation sale was $3,714. The average burial sale in the state of New York for the same period was $10,128. What that essentially means is that cremation families are spending 37 cents to every dollar a burial family spends. One of our colleagues that covers Iowa recently wrote a book, and when he was initially writing it, he was bouncing some ideas off of me, and he mentioned something one time, and I did not understand it, and he had to explain it to me. He said, cremation is like a peanut allergy. And I kind of scratched my head and I said, you're going to have to explain that. What do you mean by that? He said, well, if someone eats a peanut and goes into anaphylactic shock, allergic reaction, what caused it? Was it the peanut? I said, well, of course it was the peanut. He said, actually, it was the body's reaction to the peanut. It was not necessarily directly attributed to the peanut. So cremation is not bad. It's been our reaction to that problem. Why is cremation so important to me financially? Why does all this matter? Well, I just went over the average sales, and when you're looking at $10,000 average burial contract versus a $3,000 to $4,000 cremation contract, to me, those are 2 unmatched bookends. They're 2 extremes at either end of the spectrum. And when it comes to business, nearly every business, their doors are being kept open from the people that buy in the middle of the road. The middle class is what's keeping the doors open. So for the funeral industry to have 2 extreme pricing structures and nothing in the middle, that is really what concerns me the most. Why is cremation so important to me financially? Does it really matter, and why? Well, the math shows us that cremation calls are nearly always a reduced revenue call. The current pricing structure that we have has drastically changed the landscape of our profession. So let's run some tests to see how healthy your funeral business actually is operating. Is this condition survivable? It absolutely is. You simply have to know what you're looking at and what to look for and how to adjust accordingly. Remember what Jack Welch said about change. This is your opportunity. So the first important financial statement that I start with clients would be the income statement. Again, it's also called a profit and loss, or P&L, or a statement of income and expenditures. What does it do? It basically summarizes a company's revenues and expenses, and it will navigate you to the bottom line where you will find your net income or loss. It's going to give you some insight on a company's ability to generate revenue, manage your expenses, and be profitable. That is the whole point of unlocking your doors on Monday morning, is profit. Financial statements, keep in mind, are comprehensive, but they are focused. You just need to know what to understand when you're looking at it and what they're telling you. So I've got an example here. This is right out of our database. This is an actual client. I've hidden all the confidential information. The first thing I want to point out is when you're looking at an income statement, you need to understand the format. And the format of financial statements vary slightly. There's no official boilerplate that you have to compile everything in, so the format does vary slightly. The other thing I want to point out, and I'll show you when we get a little further into this, is the cash advances are not accounted for initially in the profit and loss statement. We pick those up later because we feel that cash advances, while they are important, they do not contribute to the bottom line. So we don't put them in operating revenue or expenses, but we do, as accountants, have to account for them. Also, when you look at this format, we break out revenue between burial and cremation. And I think that's key when you're trying to make financial decisions for your business. You really have to break things out, look under the hood, peel the onion back, so to speak. So when you're looking at financial statement in this format, you've got your current month of revenue or sales, and then your year to date. Now this is a final, so this is going to match the tax return that we prepared. To the far right is a percentage in each category, and that's a percentage of your total sales, total revenue right there. So that is your total sales for the year going into, this calls it cost of merchandise, I call it cost of goods sold. These are your expenses mainly to your suppliers, casket companies, vault companies, actually clothing, that's odd. So again, broken out between burial and cremation. So if you take your total sales right there, less your cost of goods sold, that gives you your gross profit amount. This gross profit takes you then into your facilities and operating expenses. We have the operating expenses broken out into several different categories: facilities, automotive, personnel expense. Something I want to point out on personnel expense is that because the funeral profession is so service oriented, that is going to most likely be the most expensive operating category expense on your P&L. Supplies expense, business service, that would be accountants, attorneys, banks, architects, office supplies. Promotion expense, kind of self-explanatory. And then after sale expense. This is a very important piece to look at. This is a client of mine, so I know exactly what's going on here in the financial statement. Discount on sales. They primarily sell packages. So when we changed to that format, I told the owner that I want to track that to show him at the end of the year, not necessarily what he gave up, but what the discount amount was. So their funeral directors, when they meet a family, will complete the contract with full retail and then offer a discount down to the package amount. So at the end of the year, I want to show him his funeral home gave away $112,000 of package discounts. The next that I want to point out, pre-need discounts. That is what I would call pre-need shortfall. In other words, someone has prepaid in the past, and when it became an at-need, there was not enough money in the trust to cover 100% of the current cost. So again, I want to track that. Miscellaneous expense. So this will navigate you to your total operating expense, $1,214,505, leaving you a net operating profit of $362,564, or 17.4% of the gross sales. That's what I want to know about, all this information up to this point. Here is where we would account for the cash advances coming in and going out of the company. bringing a net profit or loss to this amount and this percentage. These are the numbers that are going to match the tax return. The next financial statement that's important to look at is a balance sheet. It's also called a statement of assets, liabilities, and capital. And I want to point out that it's called a balance sheet for a reason. Why? Because it balances, or it should. What I mean by that is if you took a set of scales and on one side you put the assets in, the other side you put your liabilities and your capital or equity, whichever one you want to call it, those two amounts should equal each other. If it doesn't balance, there's a problem. Basically, it's just a set of scales. It's going to balance. Something I also want to point out is that a balance sheet is a moving target. It is just a snapshot in time. If you printed a balance sheet, by the time you went to the printer and got it out, it may not be accurate. And what I mean by that is while that is being printed, you have funeral directors that may have met with families. You have families that may have came in and paid a bill. Someone may have went to the bank and made a deposit. So keep in mind, a balance sheet is only a snapshot in time, and it is a moving target. Basically, it details what you own and what you owe. So here is an example of a balance sheet. First area, it's going to have your listing of assets. Assets are going to be listed in order of liquidity. And what I mean by that is assets that are cash already or can be converted quickly to cash are listed first. This $300 petty cash is probably a cigar box in the secretary's desk, so it's already cash. You go down to your checking accounts, money market, and then accounts receivable. Obviously, accounts receivable is not as liquid as petty cash. Hopefully, you're going to get all that in payments, but it may be a while. Then you look down again in order of liquidity. Obviously, land and a building is not as liquid as a bank account. When you're looking at a balance sheet, keep in mind that that is your cost basis. Has nothing to do with fair market value. So this funeral home, when they bought the building, you can imagine if you paid $126,000 for a building that's suitable to operate out of, that's probably been quite some time ago. So again, that is your cost basis. That is going to be reduced by depreciation over time. So your cost basis minus depreciation, the book value on this building is 0. So those are your assets. Remember this number here, 815,805, total assets. Now you go into your liabilities. Liabilities are listed in order in which they're becoming due. So these accounts payable, there may be bills in there that are due immediately, maybe 10 days, 30 days out, but they're coming up fairly soon. Property tax, that's usually paid in most states twice a year. That's not due immediately, but it's soon. Sales tax, same way. This funeral home in particular does not have any current long-term liabilities like a 20-year mortgage or anything. So that would be listed here. Again, they're listed in order in which they're becoming due. Owner's equity, this could be an entire session on its own, so I'm not going to really cover a lot of that because it's not really important for what we're doing today. So if you add the total liability plus the equity equals your 815,805, which is the same as your asset balance. So in this particular case, everything balances. Some things to remember. If you don't remember anything else today, one of the takeaways that I want you to keep in your mind for the rest of your career is that cash is king. That is always, there are no exceptions to that. Cash is king. You cannot overcome overpaying. You have to run this like a business. Borrowing more money will not solve most of your problems. It simply digs the hole deeper. So I've shown you the two financial statements that are the most important. But what does all of this mean? I'm going to break it down for you to where you'll understand the meaning of everything that we just went over. These figures came directly off of the profit and loss statement that I just went over with you. Percentages, same way. Over here to the right of that, I have goals. My goal for each of my clients is a net operating profit of 18%. So you can see where they came in at 17.39. I'll give him an A- for that, I guess. So 18% net operating profit. Would you believe that nationwide the average is between 5 and 6%? So if I'm taking on a new client and they're an average funeral home as far as profit, and I explain to them my target is going to be 18%, they get very, very nervous. They don't think it's possible to get there. I can assure you that with hard work and prudent business practice, you can get there without much problem. So those numbers came directly off of the profit and loss statement. Their cremation rate for that year was only 27%. What worries me is their cremation revenue. Again, remember we break the revenue between burial and cremation. Their cremation revenue was only 13% of their gross sales. This gap is not unusual. Almost every funeral home experiences this gap, but that is what is concerning me going forward. Now I want to talk to you about the burn rate. It's not what you think. The cremation rate's 27%, has nothing to do with the burn rate that I'm getting ready to talk to you about. So when I refer to a burn rate, it's how much cash is this funeral home spending every week to stay open. So in this case, their operating cash burn rate, I take your total operating expense and I deduct from that amount any non-cash items like depreciation, amortization, discounts like we talked about. I want to know exactly the amount of cash going out of that funeral home per week. And just to operate, it's costing them $20,372 every single week to unlock the door on Monday morning. Now let's jump into the total cash outlay. What's the difference between the two? The total cash outlay would include your operating expense, your cash advances, your cost of goods sold, any long-term debt service, or actually any debt service. So the total cash outlay jumps to $51,984 every single week. Now let's look at the accounts receivable. You get that balance from the balance sheet. So again, all of these financial statements are all in one snapshot here on one sheet. But you look at your accounts receivable. Essentially what this is saying is if they collected everything in their AR, they could go 3 weeks without answering the phone and still make all of their bills. Then you want to look and see how much cash reserve you have. So from the balance sheet, again, that's a moving target, but gives you an idea. They have 3.6 weeks set aside that if they don't get a call or nothing else comes in as far as revenue, they can still operate. Then you want to look at your burial and cremation families. What are your cremation families spending compared to your burial families? And in this case, it's 43 cents on the dollar. I think last time I saw a nationwide stat, it was around 35 cents on the dollar. So again, these are all very strong numbers. Their AR cycle, how often are they getting paid? This funeral home is getting paid on average 24 days after the contract is signed, which is very, very good. Kurt's going to switch over to the next financial statement that I find very, very informative. It's called an EBITDA or EBITDAR statement. And what that means is it's earnings before interest, tax, depreciation, amortization, and rent. It may not always be rent because if the real estate is owned by the operating entity, the funeral home, there obviously would not be any rent paid. So in that case, it would be an EBITDA. A lot of funeral homes you're going to find the real estate being held outside of the operating entity, and there's tax advantages, there's legal advantages, but again, we're not going to get into that today. So if the real estate is held outside of the operating entity and rent is being paid, then it becomes an EBITDAR statement. And it basically is just a statement that will detail the strength of a company, how strong it is to fulfill its obligations, which are liabilities, and to generate cash. It's also helpful in determining what a funeral home is worth. If you were looking to buy a funeral home, the first thing a bank is going to do is calculate the EBITDA or EBITDAR. But what I want to show you is not necessarily for buying and selling a funeral home. What I want to show you is an EBITDAR, and I want to explain to you what I would go over with a client that isn't necessarily looking to sell, which would be good information what the funeral home is worth, but what I want him to see is this is 5 years of everything that went in and out of that company and is averaged here to the right. So what this does, it gives you an insight into any trends within the company. If you were to take all the paper it would take to show these, it's probably 2 feet of paper that's on one sheet here. But this net income here, that's going to match your tax return. So you can see if industry average is 5 to 6%, this is a very strong funeral home. And if you see the revenue trending, something's going on to cause that revenue to go up. And then when you add back the items we just discussed, you're going to get an EBITDAR value. And again, that's what a bank would be looking at. It's really irrelevant unless you're looking to sell or buy. It's good information to have, but what I want someone to focus on unless they are selling or buying, this information contained right here. It's 5 years of everything in and out of the company. It's very good information, gives you a way to start spotting some trends. Now, I've done the first half. Kurt Daly is going to wrap up the presentation. His expertise is accounts receivable, collections. He's a wealth of knowledge when it comes to FTC information, Truth in Lending Acts, payment policies, etc. So, Kurt.
Thank you, Sean. That's been great information so far. So we all know that you have to collect your money. You can have everything just spot on, your accounting, your tax planning, your tax returns, all of your business decisions. But if you're not cash flowing your business, you're going to have a problem. And, you know, there's some reasons why that AR is really important to your business. For one, you know, you have a business in your community, and the profession that you're in is really to serve your community. And I started my career with Federated in the accounts receivable department. So I've always thought about the money part first. And if you perform a funeral service, you deserve to be paid for it. And Sean has shown that you have to be paid for it in order to keep the lights on and continue serving your community. So like I said, it became clear to me that money was important, but you guys chose this profession in most instances because it's a calling, and money is not your driving force. And that is by no means a negative. In fact, I think it's a distinct compliment that the primary, if not singular focus for you is serving your families. So what we want to do is talk about some ways that you can certainly continue to do that but also keep an eye on your business. You're running a business, and financial security is important to you, and in many cases, the team of staff that you have. They rely on your business and it operating soundly in order to survive. So you have to pay very close attention to your business. Many of you have goals, and it depends on what your goals are, and there's no right or wrong. It's just a matter of what are your goals. Do you have a well-oiled operation that you want to keep running tip-top and you need to improve your equipment? That's great. Maybe you want to do a remodel. Maybe you want to build an addition, or maybe you want to expand your footprint into other communities. All of those things require cash flow in order to achieve those goals. You also want to secure your future. It's a business. You're maintaining and growing your business in hopes of maybe passing it on to the next generation, or maybe you've got a key man or somebody else that is going to continue to steward that business in the community. You need to cash flow that business and create that foundation on which it stands. So let's talk a little bit about why you have to focus on AR and what goes into that. The first thing is, a good collection plan actually starts at the arrangement conference. You don't have to wait until you're not paid to start thinking about collection. It starts with the arrangement conference and while you're completing that funeral purchase contract. Of course, you're going to go down the left side and the top half of the right side with your services and merchandise that the family is going to select, any cash advances that you may have. Then you start getting into what I consider to be the really important part of that contract. Maybe they're going to check a box that shows and has them attest that they received the general price list, so you don't run afoul of the FTC funeral rule. Then you're going to get into the terms section and make sure that you have that information completed, because those terms, if you don't get paid, can act as a nice carrot or whip to get the family to pay you. You're going to go down even further, and that's where all the debtor information is. And you refer to your families as the families you serve. From the collection standpoint, we kind of consider them debtors, because really in the credit and collection orbit, that's what they are. So my opinion is everyone signs the contract. Anybody that has input in the funeral arrangements, I don't care how small, if they have input in the arrangements, they sign the funeral purchase contract. I could spend a full hour just talking about this and going over collections and telling some stories. And I'm going to tell one that really highlights that. This is an absolutely true story. A mother passed away, and the three sons went in to make the funeral arrangements. One was a doctor, one was a lawyer, and one was mentally challenged. Guess which one signed the funeral purchase contract? All three of those boys should have signed that contract. And I will tell you that it ended up being a bad debt. But you need to get full legal names. You need to have them give a written signature. You need to get a street address. And since the advent of 911, everybody has a physical address. I don't care if they receive their mail at a P.O. box number. You're free to take that, but get their physical address, because that may become important if this becomes a receivable and somebody has to do collection on it. You want to get phone numbers, because that's a good way to get a hold of somebody. You want to get their cell number, because pretty much everybody has it. And there are very limited ways for somebody to obtain a cell number if you don't get it. There is no phone book of cell numbers throughout the country. You also want to get the POE, or place of employment. And it's pretty easy to get that you say, well, why do I need that, or how? You guys are event planners. You're putting on an event that may require obtaining information or input from the family at the drop of a hat. So you can ask them Just in case I can't get a hold of you, can I reach you at work? Give me that number. Maybe they'll tell you, where I work, you can't really get a hold of me. Maybe you can at least get out of them where they work, and we'll dig into that a little bit more in a couple seconds here. But although not as prevalent, you can also get a home telephone number. I can tell you the more information you get, the better. And the next and really important part of this is the Social Security number. It is the absolute best source to confirm that you're dealing with the actual person they say they are. Some people may tell you, look, I'm not giving you that. It's illegal to even ask me for that. It is not illegal to ask that, but you don't have to do that. You can give them an option. I either need your Social Security number unless you're going to pay me in full right now. That's the only way that they get out of providing you that Social Security number. But keep in mind, as it says in red at the bottom of the screen, they can put a stop payment order on a check, or they can dispute credit card charges. So your best bet is to obtain the Social Security number. Let them know that you would never disclose it, you would never sell it, it is kept secure. But it is best to get that information. The reason that it really can become important is, let's say you have a receivable and you have somebody that tends to move a lot. That Social Security number is invaluable when it comes to doing collection work and doing what we call skip tracing. And further, if you get into a legal situation, there have been some locales that will not grant a judgment or a lien if you don't have a Social Security number, because they want to be absolutely certain that they are granting that judgment against the proper person. So there is another reason that you really need to get it, just in case. So how do you go about going through this and showing intent of the family and avoiding a situation where they tell you that they were distraught or they felt that you pushed them into a decision? I can request that every funeral director use a written payment policy, and you use it in conjunction with the funeral purchase contract. It substantiates that there was no duress, that the family willfully chose their method of payment based upon your options. And you can, we actually have printed some payment policies for some of our clients. It's a separate document. It clearly defines the payment options and the options that you do accept. And you'll see on there, there's also, you don't want to put a payment plan of more than 3 or 4 payments. Again, this is a big topic you could get into, but it can create the situation where you're considered a creditor and have to complete truth in lending disclosure forms. So what you're looking for is a payment option. You don't want to call this a credit policy, because when you throw the word credit out, people think, oh, I'm going to be able to walk out of here today without paying anything. That's not what you really want them to think. You want to gear them towards, how are we going to figure out payment by the end of the arrangement? So some of the more customary options for payment would be a fully funded pre-arrangement, whether they're going to give you cash or a certified check. They're going to let you swipe a credit card. They're going to do some assigned life insurance, or maybe you decide that the easiest thing for you is fast funding of assigned life insurance. Those are all great options, and they all help to secure payment for you. But I like to have you get a payment policy, treat it like the funeral purchase contract. Each family member signs, the funeral director signs, you give them a copy to retain. It does not replace the contract, but it further documents how the family intended to pay you should collection be necessary. So let's say that your duty to serve the family was stronger than securing payment. Again, I can't fault you for that, because you have families come in all the time that have this need, and that's what you do. What I'm trying to do is give you the tools to avoid having to write off a lot of accounts and reduce your cash flow. So you need to ensure that you've got timely billing on your receivables. You need to have a established process on how you are going to send timely reminders to the family. Are you fully completing the terms on the contract? In New York, you can add up to 16% simple interest on a receivable, but there has to be some sort of a due date, and there has to be an established percentage in there. A lot of funeral homes in their terms section have a blank where they write the date, or a blank where they write the percentage of unanticipated late payment charge. That's great if you do that, but if you forget to fill in those blanks, you can't add the interest or unanticipated late payment charge. You can't really call it interest. You have to have those blanks completed. We recommend just filling them in and having your terms printed with no blanks. It makes it takes care of itself. So when it comes to a receivable, one of the things that's really important is timing. You can see in the display up here, when an account reaches 1 month of age, the likelihood of collecting it drops to 94% from 100. After 60 days or 2 months, it's 85%, and it dwindles all the way down to, as you can see, at 12 months, 27%, 24 months, 14%. I go that far with it because a majority of the time, when a funeral home finally turns the debt over to us to collect on it, it's almost 12 months of age. So they're expecting us to collect 100% when the actual technical likelihood of collection is closer to 27 to 30%. So you need to have a plan in place at around 60 days. That should raise a red flag for you. If the family hasn't paid you at 60 days, you need to start some follow-up. So you need to figure out what your contact plan is, do your letters, your billing statements, phone calls, in order to get started and keep that account fresh in the debtor's mind that they need to pay you. And keep in mind that collections is very time-consuming. It can take days, weeks, months, in some cases years to collect an account. Does your staff have the time to invest in that? If the answer is no, and you want to choose a collection partner, you need to be very thorough in getting some information on them and determining how their method of operation is. Remember, they're contacting your families in your community to your business. You don't want to necessarily get a reputation. And I had a funeral home tell me one time, I don't want the reputation of the funeral director that's going to contact my families or maybe even sue my families. And I said, you're going to get a reputation. You're either going to get the reputation of the funeral director that is going to stay on your families to pay you, or you're going to get the reputation of the funeral director that gives away free funerals. Which reputation can you afford to have? So you need to be sure also that you're giving the collection agent the information that you have to contact your families. All of that information that we talked about earlier, the signed contract, the addresses, all the phone numbers, the place of employment, any notes that you have that you may have discussed during arrangement or after arrangement leading up to the service. I requested that from a client one time, and they very matter-of-factly said, well, why should I give you that information? Isn't that your job to figure out how to contact them? Well, we can do that, but we're not going to be very successful, and ultimately, you're cutting off the nose to spite your face and reducing the amount of money that we're likely to return to you. And I will leave you on one last thing. You need to be very cautious. You don't want to work with somebody that doesn't understand your business, because debt collections is incredibly regulated. If you think the IRS has a lot of regulations, I can tell you debt collection is more highly regulated than that. Don't let this agent that you're working with have the opportunity to jeopardize the reputation of your funeral home that you have worked so long to cultivate. So, Kelly, I guess we'll open it up to you and see if there are any questions that have been asked.
Great, thank you so much. You should all know by now, but if you have any questions, you can type them in the question and answer box, and we will answer them for you. While I wait for the questions to come in, I'll just remind you that if you were disconnected at all during this webinar, please reach out to us and let us know so we can match up the times on our report. And make sure you listed all the names of those who are sitting in. And if you missed anyone, please reach out to us. Okay, so the first question is, what if someone gives you incorrect information intentionally, like a social security number, legal address?
Unfortunately, I mean, there are some ways you can do it. We used to have some tools that you could run a credit score beforehand. Those are pretty difficult to find and pretty cost prohibitive now. There's really not a good way unless you ask them to see their social security card, but of course nobody really carries that around, and if they do, I'd be kind of suspect of them anyway. Get a copy of their ID. You can certainly get a copy of their driver's license. In fact, there are some states, in order, if you want to proceed with legal processes, you need to have a driver's license number. So getting a copy of their ID is a really great idea and probably one of the best forms of recourse you have.
Great. What is your collection fee schedule?
We operate on a contingent fee structure. We charge, and our fees, I kind of tailored my presentation to offset a question like this. Our fee structure is typically it's 35% contingent. That seems a little high, but there's a reason for that. Federated has been in business since 1925. And we started as a collection company for funeral homes. It is the one service that we have been doing nonstop continually in this company since 1925. So we understand what we're doing for a funeral home and that we are impacting and contacting your families. Now, we have a tiered structure on that. Let's say we reach out and we follow all the state and federal collection regulations. So we send out a written communication and a validation of debt. And let's say the family gets that and in 10 days they write a check. If we collect that account in full, we only charge 15%. And that happens a fair amount of the time because a lot of times funeral homes will let an account sit. The family's just waiting for you to ask for it. So we have that tiered structure. A lot of agencies will say, well, we charge 25% unless the account's a year old. And once the account is a year old, we charge 50%. We don't go that route because we understand that that account may be at or above a year of age by the time you turn it over to us. So that 35%, it doesn't take into consideration the age of the account.
Great. If you use an assignment company, can you pass along the fee to the family?
You absolutely can. It's a cash advance that goes on the contract, and you would simply designate that as ABC funding fee and whatever that fee is and include it in the cost. The family should pay that, not you. If you're paying that fee, you don't want to get involved in doing the funding aspect of it. Pass it along to the family and let it come out of the benefit that they're tapping into.
What is the current industry standard for multiples of EBITDA in acquisition?
What we're seeing on our end is anywhere between 6 to 8 times EBITDA or EBITDAR, but that's a little misleading because you got to find out when you're looking at those numbers, is that an adjusted EBITDA figure or is that unadjusted? Meaning, when you look at an EBITDA for a 5-year period, you're going to make some adjustments, maybe to personnel. There may be a reason why the personnel expense is high or low. There may be some owner add backs that you can put back in there. So to give a blanket multiple, that's fine, but with the understanding that you got to compare apples to apples. But normally what we're seeing on adjusted EBITDA is between 6 and 8 times. I've seen it up to 17, and they're still in business, believe it or not.
Okay, we are interested in the cremation burial profit loss rate for our establishment. We currently use QuickBooks and we haven't figured out a way to do it. Is there something you can share or advise on how to create it?
Well, I'm sitting here thinking, in QuickBooks, I'm familiar with QuickBooks. I guess you could create invoices for different families based on mode of disposition. A lot of our clients use QuickBooks, but we're an original book of entry, meaning you're going to send that information to us and we're going to post it where we feel it needs to be posted. So that's where the division is made between burial and cremation, because we're going to pick up on the contracts and the QuickBooks files, each disposition on each contract, and post them accordingly. I can't think of anything offhand that would be a quick solution in QuickBooks that would differentiate between the two. I'm assuming a sale is a sale when it comes to QuickBooks.
You mentioned advertising to your clients with methods to increase profit to 18%. Do you have any advice you can share with us?
Can you repeat the question?
Yeah, you mentioned advising your clients with methods to increase profit to 18%. Do you have any tips you can share with us?
Oh, okay. When you look at a profit and loss statement, you've obviously got the revenue and then your expenses. The only part of that equation that you can control are your expenses. You're at the mercy of death rate and families deciding upon your services versus your competitor. So you don't have much control over the revenue, if any at all. But you can watch your expenses. And like I showed you on the burn rate, how much cash you're going through, that usually gets their attention. But believe it or not, if you set a budget and start working towards it, you can get there. I've seen it time after time. I've seen it many times where I've left the first meeting and thought, well, they'll probably cancel our services because they don't think it's any way possible. And 5 years later, they're as happy as they can be.
What would be a good timeline to give in the arrangements for payments of services? Arrangements made on a Monday and services on a Wednesday.
Well, the first thing is, I mean, the good timeline is cash on the barrelhead. As soon as you walk through the arrangements and get down to where they're signing the contract, you give them the payment policy and you excuse yourself, maybe to get them a bottle of water or a cup of coffee, and let the family talk amongst themselves. And by the time you come back, maybe they have figured out how they're going to pay you. The problem is, once you publish the obituary, you're doing the service. So ideally, you would want payment before you publish that obituary, so it gives you some wiggle room if they need some additional time. Yeah, you need to know where that money's from because, I think families tend to rush and want to get things started, but you may have families coming in from out of town, and you need to buy yourself a little time if they aren't 100% sure. So the sooner the better, obviously.
I'm going to jump in here and just point out something that one of the things that a payment policy, a written payment policy will do is it's not going to magically make cash fall out of the sky for you to get paid, but it does open the dialogue in that arrangement conference, meaning if they don't have the funds to write you a check, they don't have enough credit on a credit card, there's no life insurance, they're going to have to then tell you that none of these work. And it opens the dialogue, and it may be another 2-hour arrangement conference, but I'd rather keep a family within their budget, whatever that is, than to put an account on the books that you're never going to collect. There's no point in that.
Yeah, you can do a family justice on if they can only afford $4,000, but they want $8,000 or $9,000. You can still provide them a very dignified service and serve them because you want that family to come back to you in most instances so you can serve them again. And that's one of the things that we look at. We recognize that we're contacting your families, so we want them to pay the debt as soon as possible, but be able to walk back into the funeral home the next time they need you to serve them with their head held high.
A couple points on that. There's no crime in being poor, and every family, regardless of their means, there is a budget.
Great, thank you. What are your thoughts on passing along the credit card surcharges?
That's a pet peeve of mine. I'll be very upfront with this. I don't like the look of it. I don't think it creates good optics. I think it creates the impression that you are trying to squeeze every dime out of the family that you can. That being said, I 100% believe that you're entitled to recover it. It's just the way you do it. You can certainly put on have the surcharge, but there's a lot of hoops that you have to jump through. And you can just now, in the state of New York, within the last couple of years, you're allowed to surcharge credit card transactions. But there's hoops you have to jump through. You have to notify MasterCard and Visa of your intention to surcharge 30 days ahead of time. Otherwise, you risk violating your merchant agreement with them. What that does is gives you time to put signage up at each entrance and at the point of sale where you swipe the card to disclose to the family that you surcharge transactions. Gives you a chance to get your credit card machine reprogrammed. You're going to have to write that surcharge amount on the contract. It's also going to have to appear as a line item on the receipt, and you can't surcharge more than used to be 4% on Visa and MasterCard. Visa has now rolled that back to 3% max. So what you probably are going to do is talk to your processor, analyze a few months of statements, and arrive at an average percentage that you tack on, because there are somewhere north of 100 different rates for both MasterCard and Visa cards. So you can do all of that, or as you saw on the financial statement that Sean pulled up, there's a line item on that in your ledger of credit card surcharges or credit card charges that you pay each year. The simple way to do that is to say, okay, I pay X dollars in credit card fees. I do X number of calls, divide that out, increase your basic services fee, update your general price list, and move on. And there you've recaptured all of that credit card charge without having to do all of this disclosure stuff. You accomplish the same thing. Somebody may say, well, that's not really fair to the families that don't pay me with a credit card, that they have to pay that. Well, we're in winter now, and I can assure you that the families you serve in July are also paying for you to plow snow now. And most of you aren't mowing any grass right now, but the families you're serving today are also helping to pay for you to mow the grass.
Great. A follow-up question about the acquisition. How about a standard multiple of gross revenue currently used for the acquisition?
We actually just ran that number not too long ago. Becky Stoder is the CPA in charge of our VATS department, which is Valuations Transaction Services. And she and I were both very surprised at the average to that. Now keep in mind, we're talking about a multiple of sales, not including cash advance. And we came up with an average multiple of 1.9, which I feel was very high, but she ran the numbers several times and came up with the same. She checked her math. So 1.9 times gross sales. Is everyone still there? Did we get cut off?
May have dropped off.
Oh, can you hear me, Kurt?
Yes, now
Yeah,
we can.
Now we can.
Oh, okay. Sorry about that. Okay, great. So the next question is under cash advances. What is the average cost to open a grave for burial in Illinois compared to New York?
Well, I don't know exactly how to answer that because, same way with Illinois or New York, you've got some rural areas that it may be $500 to open and close a grave, and then metropolitan Chicago is probably pushing $3,000. So, an average, I would probably look more into an average rural versus metro instead of just a blanket state. But like I said, rural areas between $500 and $800, metropolitan areas, and I think cemeteries are pricing themselves out of business, but I've seen for weekend charges, opening, closing, almost $5,000, which is ridiculous.
Wow.
Yeah, for sure. And this next question goes back to the acquisition question. Does the 35% contingency fee for collection include the cost of litigation?
No. If it goes to litigation, again, all the fees are contingent. We may have to collect some of the filing fees up front. We don't want you throwing good money after bad, so all of those fees are generally contingent. You may have a minimal expense to file some paperwork for litigation, but the fees remain contingent, and they're typically 45%, but I've seen them all the way up 50-55% for legal. So it's really expensive sometimes to do collection.
The bottom line is collect it when you have the best opportunity, and that's in the arrangement conference.
Yes.
Great. Well, thank you so much. There's no more questions. We really appreciate you both being on here today. You provided a wealth of information that we all need for our businesses. For everyone that's still on the call, I will just remind you that your portal will be credited in 7 to 10 days with your CEU from this webinar, and you will receive a certificate in the mail. If you have any other questions for us, you can always call us. And if you have any questions regarding this webinar, they have provided the phone number for Federated Fiducial up on the screen, and you can reach out to them. And again, thank you so much for presenting, and thank you so much to everyone for being on this webinar.
Thank you for the opportunity.
We appreciate it. Thank you all.
Have a great day.
You too. Bye-bye.